Stephen Moore, a prominent critic, argues that Jerome Powell's economic policies are detrimental, causing more harm than good. Moore's criticism reflects a. Jamie Dimon, J.P. Morgan Chase's CEO, expresses a cautious, yet optimistic outlook on the Federal Reserve's monetary policy. He believes that the Fed. Dimon's assessment is contingent upon a significant decrease in inflation. Furthermore, he downplays the perceived threat of stablecoins to the traditional banking. Despite high valuations, Vanguard identifies attractive opportunities within the corporate bond market. They anticipate potential benefits from future Federal Reserve rate cuts. This strategy balances persistent inflation and soft employment figures with significant political considerations. The resulting policy is a delicate maneuver to maintain. The Dow Jones, S&P 500, and Nasdaq reached record highs, largely driven by NVIDIA's substantial investment in OpenAI. This underscores the growing. This growth is fueled by the strong performance of key players like NVIDIA and Tesla, reflecting broader investor confidence and optimism about. The cryptocurrency market experienced a significant downturn, resulting in considerable losses for major cryptocurrencies such as Bitcoin, Ethereum, and XRP. This downturn. Despite recent volatility, Wall Street analysts maintain an optimistic outlook for sustained stock market growth. This projection is based on the belief. Following recent record highs, stock market indices experienced a temporary, minor pullback on Monday. This modest correction is a common occurrence in. Federal Reserve official Loretta Musilum indicated that there's limited room for further interest rate reductions. This suggests that the current interest rate. Murren defended his position advocating for low interest rates, despite reservations from colleagues concerning further rate cuts. This highlights internal disagreement within. The Federal Reserve's decision to continue small interest rate cuts is influenced by a complex interplay of factors. The positive momentum in the stock market continues, with Dow Jones, S&P 500, and Nasdaq showing substantial gains. Recent college graduates face a tightening job market, impacting their ability to secure entry-level positions. Artificial intelligence is increasing competition for entry-level roles, making it harder for young people to find jobs. A weak economy is reducing the number of available entry-level positions, adding to the challenges faced by young job seekers. The traditional entry-level positions are becoming scarce, hindering young people's ability to launch their careers. The Federal Reserve is considering further interest rate cuts to stimulate economic growth and potentially create more jobs. J.P. Morgan's CEO, Jamie Dimon, is cautious about the Federal Reserve's rate cuts, highlighting uncertainty in their effectiveness. Despite economic risks, Vanguard, a prominent asset manager, identifies investment opportunities in corporate bonds. Debate surrounds the Federal Reserve's future rate cuts, with uncertainty about their impact and the ideal extent. Political pressures may impact the Federal Reserve's decisions regarding further interest rate cuts. Major stock market indexes, such as the Dow Jones and S&P 500, have recently reached record high levels. NVIDIA's significant investment in OpenAI has contributed to recent gains in the stock market. Bitcoin and other cryptocurrencies experienced a downturn recently, impacting overall market capitalization. Wall Street analysts express optimism about continued growth in the S&P 500, citing AI and favorable financial conditions. While setting record highs, the stock market continues to show some level of volatility. A Federal Reserve official suggests there is limited potential for additional interest rate reductions. Federal Reserve officials hold varying opinions on the need for an extent of future interest rate cuts. Members of Generation Z face substantial difficulties in navigating the current competitive job market. The limited availability of entry-level jobs presents a significant barrier to entry for young professionals. High inflation coupled with weak employment figures is driving the Federal Reserve's consideration of rate cuts. Further small interest rate cuts are predicted through the end of the year and into early 2026. Investors are closely monitoring statements from Federal Reserve officials for clues about the direction of future interest rate adjustments. Upcoming inflation data will play a crucial role in shaping the Federal Reserve's decisions regarding additional interest rate cuts. Existing tariffs pose an ongoing risk to the U.S. economy and overall inflation outlook. The Federal Reserve is navigating a complex situation, balancing multiple economic considerations while determining interest rate policies. Wall Street professionals believe the recent changes in the stock market represent a lasting shift. The recent dip in the stock market is attributed to various factors, including investor uncertainty. The advancements in artificial intelligence are believed to be a major contributor to recent stock market growth. Following several days of record highs, markets experienced a slight pullback in trading activity. The challenges facing Gen Z in securing initial employment affect their ability to progress in their careers. Entry-level positions are vital for the development of young professionals and the overall health of the economy. Government policy should address the challenges in the job market to facilitate employment opportunities for young people. Young people entering the workforce need to adapt to the increasingly competitive and technologically driven job market. The current economic conditions and challenges in the job market have important implications for long-term economic stability. Relevant education and skills development play a crucial role in enabling young people to succeed in the current job market. The skills gap between education and industry requirements presents additional challenges for young workers entering the job market. The struggles faced by young professionals to enter the workforce directly impact the overall health of the economy. Policy changes may be needed to address the economic challenges and improve job market conditions for young workers. The current challenges are reshaping the future of work, requiring adaptation and innovation. The increasing integration of artificial intelligence in the workplace demands adaptation and reskilling of the workforce. Mentorship and career guidance programs play an essential role in helping young professionals navigate the challenges of the current job market.